Hello, everyone, and thank you for joining us for today's event with our impressive lineup of experts. The title of our event today is The Future of Trade and Investment Between the United States and the Gulf Cooperation Council. My name is Jonathan Panikoff, and I'm the director of the Atlantic Council's Middle East Security Initiative, which provides policymakers fresh insights into core U.S. national security interests related to the Middle East. We do this by leveraging our networks, our experts, and on-the-ground programs to develop unique and holistic assessments on the future of the most pressing strategic, political, and security challenges and opportunities in the region. Today's conversation will explore the future of trade and investment, assessing potential U.S. and GCC policy shifts, and the potential impact on the intricate web of economic ties between America and those in the Middle East, primarily in the Gulf. We do this today as a new chapter in our critical partnership between the U.S. and the GCC is beginning to unfold under the second Trump administration. Later in the discussion, you will have an opportunity to ask questions yourself through askac.org, and we hope you'll take advantage of that. Today's discussion is being moderated by Adel Hamezia, a non-resident senior fellow with the Atlantic Council's Scowcroft Middle East Security Initiative and managing director at Highbridge Advisory, a strategic boutique advisory firm focused on information advantage, risk mitigation, policy development, and implementation for companies and governments working in the Middle East, the Balkans, and Africa. It is my pleasure to welcome all of you to today's discussion, and I'm thrilled to have the opportunity to now turn this conversation over to Adel. Adel?
Well, thank you so much, Jonathan, for that very kind introduction. And from the outset, I'd like to thank in particular Josie Peleya at the Council for making this event happen. And of course, from my side, I'm extremely delighted and honored to be moderating this webinar panel, not only comprising of outstanding analysts, movers, shakers, policymakers, but lucky for me, people I can also call friends. I hope they feel the same way. As outlined, we're planning to have a cool, candid, collegiate, coffee-style conversation on the contours and the implications of the new Trump admin on GCC economies. And while the implications of global policy via executive order impact GCC economies, second-order issues, etc., we'll really try our very best to stick to the exam question and focus on the US GCC, or call it GCC+. So it's been, to my calculation, 65 days since inauguration. However, one can certainly invoke or remix the adage of weeks when it feels like decades have indeed happened. We'll ask, what do Trump, tweets, truth, tariffs, tech bros, Tesla, treasury bills, transatlantic retreats, tussles over trade routes, and Tehran relations mean for the GCC in this period ahead? We'll explore how the US can develop synergies, or how it's developing synergies with these GCC states, particularly in their sort of own quest to, these Ds of diversifying, digitalizing, decarbonizing, and de-rentierizing via vision programs, et al. We'll aim to unpack the drill baby drill narrative. I was thinking we've been hearing these terms of MAGA and mega, making energy great again, thinking about OPEC plus, Covadis. We heard the energy transition narrative recently sort of described as, quote, a fantasy in some quarters. And of course, thinking about, for the economists and the political economists and the business colleagues on the call, fiscal break-even prices, co-investment, energy dynamics, etc. We saw ADNOC, Aramco, and Qatar Energy featuring prominently with US counterparts just recently at the Energy Mega event in Houston, aka CERAWeek. We'll sort of think about how US GCC engagement can be furthered, what risks look like, what for Fed rates, what fault lines and forces should we be thinking about. And here we think about exogenous factors, endogenous factors, centripetal and centrifugal forces. We've seen most recently Saudi Arabia convening on the world stage with Russia, Ukraine. We were just discussing this offline with colleagues. We've seen the capital of capital, i.e. Abu Dhabi, the UAE, visit the US capital just the past week as a delegation led by Sheikh Tahnoun committing to a 10-year, $1.4 trillion investment framework, something, of course, which is includes sort of retroactive AI, semiconductors, data centers, energy, and advanced manufacturing, just some of the key areas of focus. One mini example, something I used to think about quite a while ago, and I actually used to live in the UAE, is really Emirates Global Aluminium. I remember when they had the big JV back when. We've just heard about an announcement to develop the first new aluminium smelter in the US, or I think it's the first time in several decades, and this is expected to double US domestic aluminium production, or for my American friends, aluminum, as you guys say. We're expecting the US president's first trip abroad to replicate his first administration, Trump 45, in going to the Kingdom of Saudi Arabia, and not say sort of Canada or the United Kingdom, like Obama before him and Biden after him. We're expecting something like a $1 trillion investment framework on a shorter time horizon to be announced. But of course, the earlier discourse around call it an Abrahamic dividend with any normalization now confirmed as being off the table by Saudi without an end to hostilities and the establishment, not the pathway to a Palestinian state. The discourse most recently on forced transfers and Rivieras, of course, riled up many across the region from Marrakesh to Muscat. But of course, this will continue very likely to be a sticking point. But if personnel is policy and personnel have personal ties to princes and policymakers, this should hopefully further US GCC relations positively in the period ahead. Now, with no further ado, I'm super excited to introduce our star-studded lineup before opening up the conversation, including questions from you in the audience. And as my colleague Jonathan suggested, you can submit questions using the askac.org, and I'll try and intro our panelists all in one go. And I'll apologize in advance for asset stripping their extremely distinguished bios, given they are extremely distinguished individuals. We have Dr. Karen Young, who's a senior research scholar at the Columbia University Center in the Center on Global Energy Policy. She was founding director of the Program on Economics and Energy at the Middle East Institute and remains a senior fellow there. She's the author of 2 books extremely pertinent to our conversation today: The Economic Statecraft of the Gulf Arab States and the Political Economy of Energy, Finance, and Security in the UAE, and most recently, the editor of Energy Transitions in the Middle East. Dr. Karen is a much celebrated commentator on political economy and geoeconomics of the region. Delighted to move from Washington to the UAE, where we have Mohammed Baharoun, who's the Director General and co-founder of the Dubai Public Policy Research Center, Bahouth, which produces outstanding work on the region and the region plus its relations with the rest of the world. That's not in the bio, that's my assessment. Mohammed was a reporter for Ittihad, an editor for Gulf Defense Magazine, deputy director of Watani, and also helped found the Brussels-based Bowsala Institute. We have Amina Bakr, who only recently, Mabrouk Amina, who joined Kepler in 2025 as the head of Middle East Energy and OPEC Plus research. Amina is certainly one of the go-to people on all things OPEC and energy as they pertain to the Middle East, Arab region, and beyond. Prior to joining Kepler, she was with Energy Intelligence, where she particularly focused on OPEC policy, political trends, and risk assessments vis-a-vis Middle East and the Gulf. She received the OPEC Award for Best Journalist, and she was previously with Reuters. Last and certainly not least, we have Baghdad Ghiras, who holds multiple key positions, portfolio tech bro, if I may. He is the Chief Data Officer for Medad Holding, a large conglomerate and investment firm based in Abu Dhabi, and a venture partner for Antler, one of the world's largest particularly early stage VC firms. He sits on the boards of Allied Investment Partners, a fully fledged investment bank in the UAE, and XBTO, a quantitative crypto trading firm. He's also served in a variety of academic positions focused on machine learning at IE University and RIT Dubai. Long intro from me. We plan to make this dynamic debate. I've asked our colleagues on the call to even 2-finger at each other the right way around so that we can try and keep things dynamic. But if I can sort of hop right in, before sort of the conversation proper, I'd sort of like to ask maybe a one-word, solicit a one-word or a one-sentence response max. And that goes to, I think I'll start with Amina, and then we'll go Karen, Mohammed, Baghdad. And you can't repeat what your colleague said just before you. Amina, what is the biggest single opportunity ahead for US GCC relations?
I think to expand business, and maybe Trump could achieve that Nobel Peace Prize if we do have peace achieved in two parts of the world.
Thank you, Amna. So a Nobel North Star. Karen.
I think for the US, it's these investment commitments, which are not checks in the bank, but an orientation towards US economic interest.
Absolutely. Absolutely. Mohammed, over to you.
I think it's the shift from geopolitics to geoeconomics.
Absolutely. Absolutely. Baghdad, the big opportunity ahead.
Well, I think that on top of the investment, there is a big potential to have a real, I would say, technology innovation landscape that's going to be broadly moving just US centric, but also GCC and US.
Okay. Few commas in there, but we'll consider that in a sentence. And if I can go the same way around and think about, similarly, the biggest risk or challenge that we should be thinking about in the period ahead. Amna?
Yeah, great deal of uncertainty. These daily tweets creating a lot of volatility and uncertainty and geopolitical turbulence.
Absolutely. Karen?
Yeah, I mean, I think the biggest risk is that Trump doesn't play ball, that he doesn't reciprocate. So I think you can see that in three ways. So one is in security protection, another event like 2019 in Abqaiq. The second is really tariffs and this sort of surge in very nationalist, protectionist policy, including keeping foreign investors out, and that might be in critical energy infrastructure or even in high tech. And then the last is really kind of the ripple effects of these tariff policies, which could be very damning for the Gulf, especially as we see their impact in Asia. So a weaker Asia is very, very dangerous for the Gulf.
Okay, so that was 3 and 1.
No, it was one in three mechanisms.
But buy one, get 2, 3, bog off plus 1. Mohammed, please don't follow Karen's example.
No, I would say that approaching geoeconomics with geopolitical tools is the biggest risk. So we should change the direction, but we don't change the toolbox.
Okay. Thank you, Mohammed. Baghdad.
Yeah, I would say that if the trade-off between the GCC committing on those US investments, while they might suffer also from the risk of sanction and export control that might also diminish their exposure to China.
Absolutely, absolutely. No, great sort of, we call bottom line up front, so excellent. And we'll now sort of delve a little bit deeper. Karen, I want to come to you first. In sort of 3 to 4 minutes, and we'll try and have a couple of rounds, so I'll come back to you and we can try and all cross-fertilize and develop the conversation together. But could you sort of offer us, if you like, a top line on where GCC economies are in 2025 and how you see Trump 2.0 sort of impacting regional plans, national development, vision programs, etc. Over to you, Karen.
Yeah, well, I would reiterate what Amina said, is that the volatility, the uncertainty is certainly weighing very heavily globally, but also inside the Gulf. And the kind of general sentiment is investor concern what the reaction to the implementation of tariffs will be. And this certainly is creating a softening on oil prices. Just in the last day or so, we've seen a little bit of kind of upward movement, and that's been on because of the reaction to the sanctions policy and the removal of the license of Chevron in Venezuela. And we don't really know what's going to happen in terms of enforcement of sanctions on Iran. But, I think the core relationship in the Gulf remains true, is that public finances are still extremely reliant on state oil revenues. And that cycle continues, even though we've gotten some removal and not all states are the same, that, this is still generally true. Other drivers of economic activity are still really important, but this relates again back to the state. So particularly in the Saudi case, this is about public investment, the large project kind of awards, and that drives a lot of the activity cycle. The other story has been that we're seeing a reliance on debt financing to kind of break that pro-cyclical relationship between oil revenue and public expenditure. And there is some question of how sustainable that can be. And again, not everybody is in the same situation, but in the Saudi case, for example, in the last year, if you look across government entities and debt issuance in the kingdom, we're looking at about $250 billion. And if you compound that over the last 10 years, what borrowing has looked like, it's really, significantly raising that debt to GDP level over a decade, right? So that's not normally how we look at debt to GDP, but certainly the pattern is one that is increasing. The UAE stands out as the most diversified among the 6 GCC states. But again, it still has vulnerabilities to the largest economy in the region, to Saudi Arabia. And so we see that in terms of tourism and the ability of businesses based in the UAE to enter and operate within the Saudi market. The UAE has certainly benefited since 2022 of the movement of people and capital and new ideas and innovation, particularly in the technology space. And that continues to be a source of economic growth and activity, and that's a positive. But when the global environment shifts, we expect to see some tension points there. And this even has to do with tourism numbers, and again, my earlier point, when we see a weakness in Asia, not just in China, but across Asia, in South Korea, in Taiwan, in Japan, that translates to reduced opportunities, not just in trade, but in investment and in people-to-people visits and spending. I would say, kind of if we had to put a number on what the proposed tariffs mean for oil prices and then what that means for these economies, I think the Wood Mackenzie estimate is that if we, kind of see the rollout of tariffs expected next week, that would be a reduction in global oil demand of about 500,000 barrels per day. So we already are, I'm sure Amina will speak to this, we're very well supplied, oversupplied in the market. So you take away demand from that, and you're looking at a real outlook for softening of prices, certainly through September or the end of the year and into 2026. And then lastly, I would say that the outlook for the region and for many of the proposed projects, particularly along the Red Sea coast, depend on stability. And that's very obvious, within transit of the Red Sea. And we saw, of course, this week, just an escalation in US targeting of the Houthis and their capabilities. How they react is a bit unknown. We expect that there will be more Houthi targeting of Israel and Israeli ships. A lot of the movement and sort of trade that goes or normally went through the Red Sea has already, reconfigured and is moving in other places, other directions, and those costs are somewhat factored in. But certainly in an escalation could be quite damaging to the peninsula economies.
Absolutely. No, thank you so much, Karen. Your initial sort of points are well taken, and I think it sort of almost suggests that we should maybe have rewritten the title to the impact on political economies and geoeconomics. And to that end, I'd like to move to Mohammed Baharoun. Mohammed, could you maybe sort of, I know you follow the geoeconomics of the region quite intimately. Could you maybe say a little bit on how GCC states are, navigating or embracing or moving away from the various trade routes and blocks you and I know you cover quite closely, be it IMEC on ICE, the Belt and Road Initiative engagement, and of course this BRICS Plus enlargement we were hearing about for quite some time. Are GCC states hedging, bridging, balancing in these various terms? Mohammed, over to you.
Thank you very much. I think it's neither hedging nor balancing. It's connecting. And that is the whole concept of the corridors. Corridors are arteries, and these are the arteries for the new economic realities. They are not the factories alone. So this is a complete change of the concept of international relations. Countries do not develop relations just because they're close in thinking to each other. They develop relations because they can be in exchange, in transit of goods, people, money, and information. So the idea of an ideological bloc, if you want, doesn't work anymore. There's not going to be a camp of capitalists and a camp of socialists, if you want, in the bipolar world order. This is not going to be a coalition of people who think alike. It's going to be a connection between people who might not think alike, might not even agree with what each other are doing, but they see the value of transiting goods and money and people across. And if you want to have an example outside the region, you could look at the way India managed to be good in good relations with the US and Russia at the same time. So this is not about hedging, it's about connectivity. And I also would say that both hedging and balancing are constructs of geopolitics. These are the toolbox of geopolitics. Connecting, maybe bridging, and to use your term, is a new construct that is not based on power, either economic power or military power, but on this concept of facilitation, which is the ability to connect supply with demand. And that's the two ends of any corridor.
Absolutely. Mohammed, before I go to Amina, would you say it's a fair depiction or characterization to describe the likes of Saudi, UAE? You spoke to India, slightly larger country. Would you describe these as geoeconomic swing states, or is that too strong a term?
I don't think that's what they're thinking about. I mean, look at for instance, currently the detente between US and Russia is unblocking an artery in the connectivity world, just like the Abrahamic Accords did, just like the Saudi and Iran detente did. So these are loosening up trade and be it in power, food security, and financial sectors. These are the engines of the world economy. And all of these are measures that would allow the flow of goods, of money, of people, information. So the discussion, I mean, and we've heard this and we possibly will hear more about it. For instance, of oil supply and the impact on the GCC, these are not new. But again, that is an expected impact of supply and demand, exactly as Karen has mentioned. And those dynamics shift, they move, but also they stabilize themselves in a way. So in an energy-driven world, and that is definitely going to be the world of AI, the way of digitization. That's a very hungry industry. There will be more energy usage, and when there is more energy usage, there will be far more, trade and economic movement. That's why those corridors will be very busy, even though some of them are on ice right now, as you said.
No, thank you so much, Mohammed. Amina, I'd like to come to you. Energy has come up a couple of times already. Naturally, of course, this is the sort of lifeblood of the GCC economies, and we heard about vision programs, diversification processes, and break-even prices sort of come into the conversation. If I may sort of be greedy and ask you for almost a 2-in-1, could you maybe just sort of say a little bit about US energy policy impacting GCC global energy markets? We could maybe come back to what it means for renewable investment. And as an appendage or an addendum or an ancillary point, maybe sort of just unpacking OPEC plus dynamics for us. We hear about group cohesion, the unwinding, maximum pressure, Iran, Venezuela, teapots. Could you maybe sort of just unpack this for the non-energy observer as well as the energy expert? Amina, and numbers welcome. Amina, over to you.
Thank you, Adil. I'll start with the tail end of that question because a lot of queries come about the market dynamics and what we're seeing at the moment. So I think, Trump has created a lot of confusion in markets. We're dealing with policies here on both ends of the spectrum. We're talking about sanctions. Sanctions potentially could lift prices and take supply off the market. But when you're talking about tariffs, as Karen mentioned, tariffs could slow down the the economy, and therefore we'd have a slower rate of demand in an environment where already there's a lot of negative sentiment out there. And I think that's one of the main reasons where we're not seeing oil prices where they should be, because OPEC Plus have been keeping their cuts for a very long time, and just very, very recently decided that they're going to be starting the unwinding process very gradually over an 18-month period. Now, the first thing I heard, Adil, when they, announced the unwinding of the cuts is that, oh, this is because of Trump. Trump picked up the phone and he called someone in Saudi Arabia, or he called the OPEC secretariat and asked them to bring down oil prices, and therefore they're bringing back supply into the market. Absolutely not. That wasn't the case. I mean, that deal was taken, or that agreement was taken by the group, or the 8 countries that are offering voluntary cuts last year, before Trump came into office. And a lot of these countries have been sitting on these cuts for a very long time, and they feel that it's the right time to gradually bring back some of that supply. So this idea that Trump has leverage over the group and he's going to immediately ask for lower oil prices and OPEC is going to have a knee-jerk reaction isn't true. And I think this is kind of a reflection of where relations are between the US and the Gulf. It's evolved. It's no longer the classic or stereotypical security versus supply of oil. It's a lot more complex than that. And many of the Gulf, the Gulf states and OPEC at large, these are countries that are looking after their own interests. And by their own interests, meaning having prices at a certain range that break even their budgets, that enable them to diversify their economies. So their priorities come over Trump tweeting or saying at a conference, as we heard earlier this year, bring down oil prices. It's more complex than that. Now, your point about US shale growth and how that kind of fits into the picture. Since Trump came into office, we've seen that, this whole drill baby drill scenario, and him encouraging the upstream sector. But in doing so, you do need oil prices to be at a level, when we're talking about Brent, I would say maybe 65 to 70, in some areas you need north of that to drill new wells. So bringing down the oil price under that level is not going to enable the shale industry to drill more or produce more. But in saying that, our estimates at Kepler, we're talking about total liquids here, we're expecting a growth of around 300,000 barrels per day for the US. Internally, just within OPEC dynamics, of course, non-OPEC supply or production that comes outside the group has been always a cause for, this is something that they monitor, and it does impact, as one of the drivers in their policy. But until now, there isn't much concern about the US growing at a huge rate where, they would be concerned about over their market share. I think they're managing things quite well, and laying out this very gradual plan of increments is giving a sense of stability in the market at a time where you have a lot of volatility and a lot of questions around Trump's policies.
Amna, could you just maybe touch briefly on the implications or the impact of sanctions? And there are a few relevant countries in there, and maybe the China-India factor as well, just very briefly.
Yeah, no, on sanctions, that's a huge question mark. And again, the question was, did OPEC consider sanctions on Iran and Venezuela? And I'm talking more about Iran because they have the kind of the bulk of the exports here when they made the decision to unwind the cuts. Again, the answer is no. And the answer is no because they're not sure what the impact is of these sanctions, how much it's going to take off the market and how sustainable it's going to be. When you're talking about Iran specifically, the majority of their barrels go into China. And so if you don't address that, then you're not really targeting Iran. The recent sanctions against the Chinese teapot, finally, I thought, okay, there are moves to really, impose some kind of additional pressure on Iran. Till now, as you know, Kepler is the largest monitoring for shipments, and we look at exports, etc. We haven't seen any changes on the ground. On the contrary, we're seeing, a lot of support being given by industry players in China to teapots. So they're not going to be going bankrupt anytime soon. And it remains to be seen how much comes off. But in a scenario where we do have maximum pressure on Iran, we estimate that around 500,000 barrels of exports could be taken out of the market. For how long, still not clear, and what impact that would mean. Would OPEC immediately replace those barrels? Again, that's not sure, given that you have a lot of uncertainties around that. Sorry, your last question was on India. I didn't catch that.
Yeah, just I'm thinking more about the sanctions, circumventions, and navigate. But we can maybe come back to these points. No, that was awesome. Thanks so much, Amal. I think that sort of almost a central sort of a central factor for a lot of the discussion. We'll now sort of move from energy, the lifeblood, to maybe tech, the future market. And Baghdad, I'd like to come to you. Of course, at the inauguration, it was the CEOs of the FANGs plus Tesla, and not the CEOs of the energy firms that were in prime seating, right? So that gives us a little bit of thinking, a little bit of a sort of foreshadowing for the thinking about the importance of tech versus energy, though of course they are both central to the future of the world, but also of course the role of the US GCC almost outsized. So from a sort of tech investor perspective, could you maybe say a little bit about how the US admin is impacting your own views or approach to specific areas of technology? And maybe if I can go further, how it's impacting your investment prospecting in specific geographies, if at all. I know you guys look at everything from AI, crypto, and beyond. So, your views on that are most welcome.
Yeah, so obviously as an investor, we are very interesting to explore in the opportunities. And it's true that at the new election of Donald Trump, we've been, very interesting to understand what would be the incentives and what would be the deregulation that would enable investment to be done in the US, but done specifically on some strategic sector in which we believe that the UAE and the US have natural synergies, and therefore we've been recently very active on trying to reestablish, I would say, a strong communication and partnership in the US. And obviously that comes also with the perspective of interesting return on investment, but it comes also with some level of, risk within the portfolio, because we eventually have to re-arbitrage our portfolio geographically, because obviously we need to be careful on how those investments in the US can impact our portfolio, for example, in Asia or in China specifically. But in the meantime, that's a new practice. We didn't specifically had to use a Geoeconomics playbook. We've been mostly focused on, technology and profitability. Now, Geoeconomics is really part of our, I would say, compass that guide our choices. What is also interesting, and I think that investors specifically in the GCC are interesting, is the shift also from this kind of like NATO aligned economy to this kind of like new sort of blocks that are now moving toward a new US combination. So the fact that His Highness Sheikh Tahnoun went to the US, met those CEOs, and really reaffirmed a strong commitment of the UAE to support the economic roadmap of the US and appear as a strong partner in this field, shows also how much this new, I will say, collaboration and strategic alignment is currently being observed. And lastly, maybe if one of the, I will say, very recent project that kind of like illustrate that is that we've been establishing a strategic partnership with one of the largest asset manager, Franklin Templeton, to issue a yield-bearing stablecoin that is dedicated for global trade. So as you know, the UAE is a hub of trade, and we want to empower those trade in a more efficient, payment and financial fashion. So this stablecoin is actually fully backed by US treasury bills, which means that basically every single new stablecoin minted means that we are buying $1 equivalent of US treasury bills. And that shows this kind of like win-win strategy in which we manage to empower our trade in a better fashion. We continue to innovate from a technical standpoint, but in the meantime, we choose to have an alignment with our US partners to also foster their economy.
Like that, did you see much sort of uptick in interest after the 20th of January in this space over the last couple of months?
Yeah, definitely. Yeah. I think that we've been clearly, if you want, observing this decentralized world, right? But in the meantime, within those building blocks, there are some natural area of collaboration in which we believe that there is a win-win, specifically, I will say, in areas such as artificial intelligence and Web3.
Excellent. Great. We'll circle back on some of these items. I think that was a great sort of first round tour d'horizon, where we sort of brought in the energy, the tech, the geoeconomics, and the sort of the macro implications of the US admin. I want to circle back to you, Karen, and before I do that, if I could just remind our colleagues to, any questions you'd like to sort of put into the askac.org. That is askac.org. Ideally, you would include your name, affiliation, and question. And if you're directing it to somebody specifically, or I'll just put it out there. Karen, I want to come back to you and just to emphasize, colleagues can jump in on any of these topics. The big one is really, of course, the role of sovereign wealth funds, right? We're talking about some $4 trillion plus investments at home and abroad. Could you maybe sort of speak to how we should be thinking about opportunities and or challenges for sovereign wealth funds in the period ahead in the context of US GCC? And I think an interesting component to speak to the geoeconomics is also what collaboration may look like in third country. So thinking, or regions. So thinking Africa, Europe, Asia. Any thoughts on that?
Yeah, thank you, Adil. I think again the biggest challenge for the Gulf states and their sovereign vehicles is looking at these allocations and the new commitments, which are really politically motivated by their leadership in the direction and how that meshes with U.S. economic policy, including U.S. monetary policy. And the mention that Baghdad made of backing up a stable coin with U.S. treasuries actually becomes complex, right? Because there are a lot of question marks over what is now being called the Mar-a-Lago economic strategy or economic doctrine. And this is what has sort of been driven by the chair of the Council of Economic Advisors in the White House, Stephen Moran. And a lot of his thinking and writing is actually playing out. And so, this is the thesis that national security and trade are joined, right? That these are things that have to be in lockstep together. So it's very much, as Mohammed was saying, a departure from the way we thought of certainly a free trade architecture or a system which was designed quite differently 60, 70 years ago. So, organizing the security umbrella with an expectation of reciprocity through trade mechanisms, through economic decisions is really novel. So, I mean, we did see this in terms of what oil for security, I suppose you could say, from the 70s to the present, but this is a bit different. And so when you might have a commitment, you might, expect a commitment from a Gulf sovereign fund into U.S. investment, but then have also an expectation on that country's trade relationship with China or technology relationship with China. For Gulf sovereign funds, I think it's really a difficult moment. There are great reasons to invest in the United States. There continue to be so. But the question of nationalism and protectionism and this kind of availability of opportunities, particularly in critical infrastructure, whether it's technology or energy infrastructure, renewable or legacy fuels, I think could rear its head again, much in the way that we saw over 20 years ago in terms of like Dubai World, or what we saw most recently in terms of the Nippon Steel agreement. This is going to come up again and again.
But Karen, if I may just interject there, do you not see a Republican-led Congress, a DOJ sort of, it's a question I was going to maybe put for Baghdad, but, you know, sort of bringing down that level of scrutiny that you'd expect from sort of yesteryear? I know you're referring to Bush 43.
Yeah, no, I think this is what makes it volatile. We could see any kind of counter movement, a 180-degree change in what we would expect to happen could happen differently over a 24-hour period. And that's what makes it very hard, both from a corporate standpoint, but also from a sovereign investor standpoint. So let me go to the monetary policy issues, because I think that is really important as well. You know, both President Trump and Vice President Vance have said that they want the US dollar to remain a global reserve currency. But at the same time, they want the US dollar to depreciate. They want to encourage US exports by making US products cheaper abroad. And those two things don't really align. And so the Mar-a-Lago strategy has suggested, well, that maybe there are technical ways to get around that, whereas you could encourage holders of US treasuries to sell them off, to diminish demand and for that product and its pricing, but at the same time ask them to rebuy at a longer term at a lower interest rate. And that to me sounds like not a great deal. So if you're asking a Gulf state, and particularly Saudi Arabia, the UAE, Qatar have been significant holders of US treasuries, to sell them for a product which they earn less for owning over a longer period of time, as a political ask, doesn't really align with the return on investment, you know, objective of these funds. So I think that's a really tough one. The other issue is in terms of the ongoing negotiations in terms of a defense pact or security agreement between the kingdom and the United States. So inserting these financial or economic policy demands, including you know, restrictions on a financial relationship with China, I think is also really problematic. 2024 was the first year we saw parity between Gulf and Chinese foreign direct investment. So that's not changing. Yeah, sorry.
Just for the benefit of those that aren't following so closely, could you just maybe give 2-3 bullet points of the parameters of the wants from the Saudi side as well as the US side?
Yeah. So, you know, these were agreements that were being negotiated at the last year of the Biden administration, and went across a range of issues, including normalization with Israel, but also on civilian nuclear technology and on essentially a defense pact, access to defense manufacturing and technology, but also commitments of US security provisions, right? So that we wouldn't have another 2019 event in Saudi Arabia. And it's not really clear where the Trump administration will take that existing negotiation or what it might add on to it. And this, I think, is, you know, very, very difficult on both the kind of economic packages, whether it's holdings of US treasuries or access to investment opportunities inside the United States, including whatever the new US sovereign wealth fund starts to look like, and how it also asks for external capital as investors in that fund. So there's just, you know, a whole lot of possibilities, I would say, for which Gulf sovereign funds and their managers and ultimately leadership have to be prepared to either engage or to say, no, these are lines that are not amenable for us.
Absolutely. And I think it was great that you brought up that point around the US fund, despite the deficit, but maybe that's a discussion for a part 2. Mohammed, I wanted to come back to you, and I know I'm keeping slightly bad time and we're starting to get some questions, but I wanted to sort of put forward to you, you mentioned Russia detente in your initial remarks. Could you maybe just sort of go a little bit further and sort of think about, you know, this US-China rivalry? You know, you spoke to connecting, maybe not bridging, this Huaweiization of the region that I'm sure Baghdad looks at. What are the sort of opportunities and challenges for GCC economies in terms of this kind of almost equidistant ability to have great relations with Washington, Moscow, and Beijing? Mohammed, over to you.
Thank you very much. I think it's, again, it's this change of construct. If you are going to be interconnected, you cannot isolate someone. And this has proven to be the case with Russia. It will also be the case with China. It will also be the case with Iran. So this idea of isolation is not going to work. And I think this is the new toolbox I was talking about. You cannot handle national security just by erecting walls around you. The new toolbox says you have to erect roads around you, bridges, as you mentioned, around you. So those bridges are going to be important, and they're going to make people have a shared interest in. Now, Karen made a very important point, which is the point of the Bipulse World back in 2007, and the fact that they had to sell assets in the US because of protectionism. Protectionism is creating those walls. Those could come back again, and this is the danger I was referring to in your second question, is using or approaching geoeconomics with the tools of geopolitics. That is going to see less and less. Right now, people are looking at the numbers. $1 trillion for Saudi Arabia, 1.4 or 5 for the UAE, but that's not the case. The case is that these are investment in the new oil. So in the first Quincy agreement, you've had the US and Saudi Arabia, and by extension the GCC, agree on exchange of oil for security. I think the new, Quincy agreement, the Quincy 2.0, is going to be on AI, because AI is going to be the oil that moves everything. At a certain point of time, you could not light a bulb, without oil. It's very soon going to be a time when you won't be able to light a bulb without AI. So this is the new type of bond, if you want, that is developing. But by the virtue of the beast, or the nature of the beast, digitization is interconnected. So you cannot apply those walls when it comes to a network. So this is the type of a new thing, and it's not surprising that it was Sheikh Tahnoun who were negotiating this. It's not because of G42, because how AI is going to be important for national security across the world. And national security is not only about securing people against aggressors. It's about the sustainability of a state. And the point of sustainability, again, was the point that Karen was mentioning on how we can carry this forward. And I'll stop there.
No, absolutely. Just for the benefit of our colleagues online, when Mohammed was referring to Quincy, offline later, you can Google 14th of February, 1945, when then President FDR met with then leader Ibn Saud. And we can ask the question who the FDR would be today. Would it be Mr. Musk or Mr. Trump? I now go back to Amna. Amna, you sort of, very, sort of brought together the dynamics in a very succinct way, which was super impressive, and chapeau. But could you maybe sort of speak to more specifics around energy cooperation between, say, US IOCs et al. And Gulf NOCs, Gulf energy companies? Which areas, which geographies, which, we're talking LNG, what does this look like?
Yeah, we're looking across the board, really, Adil. And to Mohammed's point, I mean, AI is going to be a large part of that. Again, there are lots of deals that are happening, be it with ADNOC and Microsoft in cooperation with other companies to advance AI technologies to improve the recovery of oil and gas and so on. So that's a huge area that a lot of NOCs in the region that are looking to advance, if we're talking about Aramco, ADNOC, and others across the region. But also LNG is huge. I mean, I just read a story now that Aramco is targeting Woodside, which is an American Louisiana based LNG company. So again, LNG is a huge focus and an area that NOCs want to expand, and with huge targets of you know, having a larger segment of the domestic energy being produced by renewable energy, that's another huge space where American companies could contribute in. And adding to that, I mean, of course, the mining element is an area where we see companies like Ma'aden looking for US-based companies to cooperate, to have projects that are spread across the world. I mean, it's a huge. It's no secret that the U.S. doesn't want to rely on China for its minerals and materials, and that came into the negotiations when we were talking about the possible peace pact between Russia and Ukraine. So again, having a lot of Gulf investment or capital-rich countries invest in either in mining or in processing facilities that would help the U.S. achieve that objective. These are all areas that I think that, you know, both the U.S. and the Gulf could work on.
Amina, just on that point, it sort of brought me back. I was speaking to a colleague recently. You would have probably seen at the recent meeting between Russia and the US in Saudi, you had heads of sovereign wealth funds there. You had other business players. Do you see, if that day comes or when that day comes, a symbiosis between Saudi Gulf entities, US companies working together in Russia, or also thinking about Africa in the mining space? Is that something you see on the horizon?
No, for sure. I mean, that's something I think Trump is a businessman at the end of the day, right? He wants a deal. He wants these peace deals, but in order to achieve other deals, and these are economic deals. So yeah, in short, I do see that coming together, and I see the Gulf playing a big part of that, and allocating capital to projects around mining.
No, thank you so much, Amina. Baghdad, I'd like to come to you before we sort of start to incorporate the questions from our colleagues, who, again, it's askac.org for any questions you'd like to submit. Baghdad, could you sort of, you mentioned export controls earlier on, lower scrutiny came up, DOJ, Congress. Where do you see the sort of biggest opportunities and risks for tech investors looking to the US and vice versa? And maybe, I know you've educated me in the past on the role of entities like TII in the UAE. Where do you see sort of areas for collaboration, research, business, and beyond?
Well, I think that on one side, traditionally, the US is and will continue to be probably the leading innovation hub. And when I say innovation hub, it's really like this 0 to 1, this demiurge innovation, right? And even the Chinese acknowledge that. So it's very important to keep in mind that from a capital deployment standpoint, we still believe that disruptive innovation, the ecosystem that is in the US, is quite unique. And that's very interesting, very important for us to be very active over there. That being said, obviously, the UAE is trying to develop its own capabilities, and that's the like of TII. I remember that back in 2022, we had our DeepSeek moment, if we want, at the time with Falcon LLM, because when it was released, it was the most powerful open source LLM globally, outperforming
for Arabic source.
Yeah, outperforming Llama from Meta. And I think I believe that this is the right combination. I think that there is definitely capital that needs to be deployed in the US because disruptive innovation is there. But I think that the best way to basically build a smart portfolio is to understand the technology, and there is no better way for understand to doing by yourself. So it's important to have cutting edge research and development effort in the UAE. Something that could be also interesting on the other side, I think that there is a lot to win for US companies to get familiar through the UAE as a launchpad to those emerging markets that they don't necessarily know quite well. I'm thinking about the great synergies that we can have in African continent, for example. Typically, the deal between G42 and Microsoft in Kenya illustrate well potentially this new trend in which US companies can partner with UAE companies for Global South go-to-market strategy. That's in a nutshell what I think. Sorry.
Yes. On that point, when it comes to research, particularly, the war for talent is something that comes up a lot. We've heard about golden visas in the US. Of course, we have various programs in the UAE. How important is that human capital factor for you? And do you see potential friction between the US and Gulf states in this war for talent?
I don't think so, but what is sure is that the UAE offer definitely an amazing quality of life that became more and more important for talent. And I'd like to say that eventually, if within the US new migration framework, some of those researchers might not feel comfortable in the US, then definitely the UAE can represent the best alternative for them. That's something that we need to keep in mind. But also, I think there is a large pool of rising talents. I'm thinking about India, for example. I will say that if you are an Indian scientist, then if you want to stay close to your home, UAE is an ideal location for you. So there is this natural, I will say, geographic position that the UAE have that can act as a magnet on top of obviously, salaries and quality of life and the ability of the UAE to build international collaboration with a state-of-the-art innovation center all over the world. It's not because you are based in the UAE that you won't be able to collaborate with a global research center.
No, absolutely. No, I think these are really important points, and I think we may come back to this Africa point through one of the questions. I now want to sort of start to incorporate some of the questions, and what I'm going to do, I'm just looking on this alternative screen I have, and I'm going to sort of throw a couple of at you. So if you could, if you don't have pens in front of you, try to remember these, because I want to sort of bring a couple of these. The first is from Jim Crane at the Baker Institute. He asked, how are Gulf leaders responding to forthcoming Israeli-Trump consultations, seeking a joint course of military action on Iran? Of course, more of a security question, but naturally impacting the economy. We have a question from Siridi on sort of, do you see areas for investment and commercial cooperation between GCC states and the US in Africa? And another interesting question, I don't have the name, which is, do we see space for the GCC states plugging some of these aid deficits that we're starting to see with the unraveling of US aid? I don't know if anybody wants to pick up on any of those in any particular order. If not, I'll pick someone who wants to jump in.
Can I take Jim Crane's question?
Please do.
Thank you, Jim, and good to have you around in the audience. I think there is very little appetite, at least in my view, in Trump for war. He's not a warmonger. Netanyahu might see that this is an opportunity, but I don't think this is the way President Trump looks at it. And I think even though we have a lot of discourse when it comes to Iran reaching a deal, the whole point is that about reaching a deal. The letter that was sent to Iran clearly says, we want a deal. They put a framework on it, a time frame for it, but the underlying thing is that we need a deal. And I think that is, but the implication, of course, any war, any conflict, not only in Iran, anywhere, including the one in Ukraine, any potential conflict in the South China Sea or in Africa will have an impact on all of the GCC because of the interconnected nature.
Thank you, Mohammed. Did anybody want to come in on that point, or the aid or the third country collaboration in Africa?
I could comment on those last two, perhaps. I think it's important to remember what USAID historically did in its operations. It did a lot of capacity building, the kinds of technical assistance that traditionally GCC states have not performed in the MENA region or anywhere else. The GCC states are very generous in terms of provision of food aid or emergency humanitarian assistance, but they don't do governance, and that's really that's the vacuum that USAID is leaving. So no, and second to that, I do not see an expansion of GCC foreign aid policy, rather than it's been contracting really since about 10 years ago, since about 5 years after the Arab Spring. So instead, it's really become more of a decision about investment vehicles, offering financial intervention and support in certain locations with very targeted reasons and expectations of returns. There will certainly be, I think, support for people in Gaza, for people in Syria, but it's not at the level of capacity building and governance and rebuilding governments in the way that an institution like USAID has done in the past. On the question of third country cooperation, particularly in Africa, I mean, Amina mentioned earlier, I mean, there's huge opportunity in mining, and we may see in the way that the Development Finance Corporation is refunded and remandated that there could be opportunities for co-investors. That was something that even in the Biden administration through the Libido corridor, that Saudi Arabia was kind of invited to be a little bit of a co-partner in. So that might happen again, but from a very different lens and a very different expectation of outcome, which will be much more financially focused, return on investment, rather than as a development project.
Yes, absolutely. Amina, could you maybe sort of share? I know you sort of focus on the more methane heavy type of energy, but do you see sort of more space for collaboration between Saudi players when it comes to the renewable space, where we've seen a lot of investment in the likes of Banban, Ouarzazate in Morocco, Banban in Egypt? And we have a question for you, which is a bit more specific, which is, and a number is required here from John K. What is the optimal price? Great question. For Riyadh, Washington, and Moscow, they have a vested interest in making sure Brent doesn't collapse below $60 a barrel. Statement/question. Please let us know. Are we going to see an OPEC plus to include DC? Amina.
No, an OPEC to include DC, that's not possible. I mean, just given how the structure of the US works and so many players and anti-monopoly and so on, so that's not going to happen. And yeah, great question. I mean, it's a kind of a taboo subject across the Gulf and OPEC. Whenever you ask them what is the ideal price or what are you targeting, they never give an answer. There are obviously break-even points for every budget when you're talking about the OPEC plus states. That varies. But I think the sweet spot for both the US and OPEC plus at large, and I'm generalizing here, it might be between 70 to 75 Brent, because above that you hear Trump complaining, and within that zone, I mean, that seems to be the kind of zone or range that everyone is okay with. So that would be my answer on the price question. On renewable energy, yeah, absolutely. I mean, there's tons of collaboration needed to meet these very, very ambitious targets. But the thing is, Adil, it's not going to be a collaboration with just one country. And I think that Saudi Arabia learned that they're still going to be reaching out to Russia, to China, to other regions. So they want to diversify their partners when it comes to these kind of big projects. But there is space for the US to play in that area. And nuclear is another thing that, I mean, an area that Karen mentioned, but it's something, again, that we expect during Trump's next visit that perhaps would be revisited, and we would hear more if Saudi Arabia is willing to sign a 1-2-3 agreement or not.
No, absolutely. Thank you so much, Amina, for those insights. Baghdad, we have one very specific to you, I believe. It's from Ahmed. And he's just sort of asking, you know, it's not very clear if I can say, Ahmed, but if you could maybe speak to, you know, how should we be thinking about the sales of advanced semiconductors? I suspect that involves China. And also Trump is very keen on AI and crypto. Fine. How do these technologies play together, and what does that mean for the UAE and Saudi? Baghdad.
That's a broad question. Okay, let me start with, I would say, the semiconductor side, because ultimately what we've been doing specifically between 2021 and even 2024 is really having a direct correlation between the hardware that you're using, basically the compute, and the efficiency of the model of the AI. So we just believe that as long as we have the best hardware, we'll have the best model. And that perspective changed, I will say, not just a little bit after the release of DeepSeek early this year. And therefore, there is now a new thesis around having just innovation on how models are being designed, and if they are obviously cheaper to run, then you don't need to have such sophisticated hardware. And this is I would say this is really where the US-China competition is going. Is China necessarily have to build the chips that are as powerful as NVIDIA to be leading in AI, or do they just have to come up with different model architecture that doesn't require such a level of sophistication on hardware? And I really believe that it's going to be an interesting race in which the US and China will compete in any, I would say, subtask. But in the meantime, we need to keep in mind that till today, China represents potentially 50% of the entire, I would say, probably manufacturing. So they know how to build things. And it might be a bit, I would say, dangerous to think that within the next 10 years, they will not be able to come up with, hardware and compute that will enable them to, power the AI. On the other side, on the crypto, the thing is, there is also the thesis that the currency of AI is crypto. The fact that we're going to have something that we call AI agents or digital workforce, they will transact, right? You will ask your AI or your personal assistant to book a flight for you or a hotel room, and you want them to transact. You want them to pay. Can an AI agent, have a credit card from Visa or MasterCard? Can they have a bank account of Bank of America? Can you delegate your payment to an agent? It's not clear at all. But if you enable them to use stablecoin, then you are not into the same framework. And therefore, you can combine the Web3 infrastructure with the token, in this case, a stablecoin, and an AI agent together, and you really now unleash a very interesting combination to power the next generation of the economy.
This is certainly above my pay scale, but I'm panicking thinking about this prospect: governance, money laundering, my card being spent in areas that maybe I didn't agree to. Maybe this is for again another webinar, but could you see maybe the GCC playing a role in standard setting, or would that be a stretch?
Yeah, I think that the UAE is at the forefront of both Web3 and AI in terms of adoption, in terms of innovation and regulation. So I see clearly that there is a possibility tomorrow that we have an AI regulation that concern actually AI agent, for example, that's going to regulate AI agents, question related to identity, for example. Can we identify an AI agent and how it can be tied to its owner, it's a company or human?
Yeah, absolutely. We have a few minutes left, and we've got a couple of interesting questions, sort of the whole gamut. I think I can unpack this question. Karen, this might be for you. The question is, what does the OECD Pillar 2 regime mean for the GCC? This, I think he's referring to this minimum 15% tax minimum tax rate that multinationals, regardless of where they operate, should be engaging with, and the GCC states have been sort of engaging with this in recent period. And what does the Trump directive mean in terms of extraterritoriality? I think that's really what we're getting at. So if you could think about that. And this one I'm going to push to Mohammed. And the question is from James. James without, okay, so it's what does an Abqaiq 2.0 or an Abu Dhabi Airport 2.0 mean for the US Gulf relationship and US China relations? Very interesting. Karen, do you want to go first?
Yeah, sorry. Yeah, I don't have a great answer. I don't really know. I mean, I think we've had efforts at kind of a global minimum tax, and that's something that the Biden administration was interested in. I have not seen, nor am I familiar with what the Trump administration's policy is or would be. They seem to prefer these kind of bilateral negotiations. And of course, there is this, tremendous tension between the US and Europe now, exacerbated by, comments from the Secretary of Defense, et cetera. So I don't know the answer, but I imagine that any kind of cross-regional, multilateral kind of frameworks are not going to be broadly supported in the short term in this administration.
From my understanding, there was a directive January 20th, which was around retaliation against the imposition of any sort of extraterritorial taxes on US multinationals specifically. So I wonder whether that is a positive for the GCC in terms of maintaining that lower threshold in terms of competitiveness. But that's maybe an open question. Mohammed, could you maybe speak to this big geopolitical question and what it would mean for the region and the relations between the great powers?
Well, it would mean that those threats continue to be real, and I have to say, continue to be expected. Very recently, we've got either an attack or a missile that fell down in Saudi Arabia, coming out from the Houthis. Most likely, it was one that fell down as it was heading to Israel or to another destination, and it didn't raise as much jingle, if you want, as it did in the first time. So, but this idea of security cooperation, I don't think we're going back to a pact similar to NATO as the previous Trump administration wanted, or even Biden administration wanted, a GCC or a Middle East NATO that involve Israel. I think these constructs are now very difficult, and remind you that while the UAE is developing its collaboration on AI with the US, it continued to stop cooperation on the combined maritime force, for instance. So, I mean, it is a question, but I think there are a lot of lessons learned from the previous time, and possibly the expectations are also different this time.
Absolutely. We have started, as usual, you start to get more questions as you come to the finish line. And on the point of finish line and sports, I believe we've lost Amna, but no worries, we're almost at time. Maybe just a final big picture question, a fun question, maybe Mohammed, Baghdad, Karen, I don't know how much you guys follow football. A few years ago, Qatar put on a great World Cup. We have the World Cup in the US next year, so the baton being finally passed on. We have hopefully some GCC states who will be qualifying. Mohammed, if you are a betting man, which I believe you're not, do you see a Saudi, UAE, Qatar, maybe a Kuwait, Oman moving beyond the qualifying rounds in the expanded World Cup in 2026?
Well, I certainly hope so, but again, you're absolutely right. I'm not a betting man.
Karen, Baghdad, what should we be thinking about? Expo World Cup 2034. Is this going to be a big driver, even at this stage going forward? Is this something to look forward to, the giga projects and that US, that sort of US technology construction, technology cooperation? Should we expect more? Is this something to anchor around?
Yeah, Karen, if you want to go first.
I certainly can't talk about sports, but yeah, I mean, in terms of, the development of infrastructure to support these large productions and the Asian Games and the World Cup and all of that, yeah, that's super. But honestly, it feels so far away. And I feel like there's so many tension points, maybe I'm a bit pessimistic, that we have to grapple with before then, even in hosting in the United States and welcoming people from all over the world. Who knows where our immigration policy is going, that I don't know, it's hard to see that far away, but I'm glad you're optimistic.
Thank you, Karen. Last words, Baghdad, and the question is, you have $10 million under the table. You probably do, Baghdad. Which sector should you put your money in the GCC or subsector of technology, I guess, for a US investor? And we'll end on this.
Look, obviously, our chief data officer will tell you AI to start with. But then what is interesting is that there is an entire supply chain of AI, right? I think it's important to keep in mind that AI started actually with, it's been discussed on the mining side, with the rare earth and the mining. And then basically how we go from this raw material to this semiconductor, and we are finishing the beauty of the hardware and entering the software space, and then we have the foundation model, and you have the application, and you have the adoption layer. So I think that AI have to be really perceived as a utility that span across all the industries. But it's very important to keep in mind that this is a final line for a lot of countries and nations today is capital must fuel innovation across the AI supply chain, because the one that will master AI or AGI will definitely rule not necessarily the world, but will be one of the leading nations in the world.
Absolutely.
And therefore, that's where I would spend my money.
I'll ask you for the company names later offline. Baghdad, I can't thank you enough. I can't thank Dr. Karen Young enough, Mohammed Baharoun.
Thank you very much.
Amina Bakr in absentia. For those celebrating in the coming days, Eid Mubarak, I'd like to thank again my colleagues at the Atlantic Council, in particular, Jonathan Panikoff, Josie Pelayo and the team, Chris as well. And I can only say, what a wonderful panel, loads of food for thought. And I'm sure we'll be doing more conversations and dialogue in the period to come. On that note, thanks from me, Adil, here in the US, and looking forward to being in the GCC very soon. All the best.
Thank you very much.